We need to talk about the 1,000 largest real estate markets in the country. We need to talk about a very, very special video coming out at 9 a.m. this morning. Yes, in about 90 minutes, you are going to get a video that I think will help change your life going forward. It is basically an interview with a 9th grade dropout who started real estate investing before the Great Recession, went from 8 paying tenants to 1, the struggle, self-management, house hacking, 203K loans. Of course, I am referring to the Lumberjack landlord. Lots and lots and lots of you want to understand how to do repair estimates. We make sure in this 2-hour discussion to break down the entire house, from flooring to paintings to windows to doors to kitchens to baths to backyards, front yards, all of this stuff. We wanted to give you help in understanding what your make-ready costs are. So again, 9 a.m. this morning, you are going to get a 2-hour video that you will want to watch because it will definitely help you understand self-management, getting started, fighting through. It was just such a pleasure to experience that yesterday. So Matt, thank you very much for what you do. The audience loved you, and I'm sure everybody watching this morning will enjoy it as well. So again, 9 a.m. this morning, 90 minutes, 9th grade dropout, made it happen. It wasn't easy. It was hard. It was a struggle. He used the system around him, house hacking a condo near Boston that didn't work out, one-time special assessment, house hacking units 9 times, moved 9 times, did a 203K loan streamline twice. It's always hard, folks. So again, you're going to want to hear that story. And of course, don't forget, break down the entire house. Lots of you asked me how to estimate make-ready costs, so we made sure we did that. So enjoy. How about the one and only Lance, Lambert, and Resi Club, man? Resi Club is coming with fire these days. I have never found this data. I want to be very clear with you. In the 22 years that I have been doing this, I had never seen the data that Lance released yesterday. It is about the 1,000 largest real estate markets in the country. And as somebody who talks about one local market and then the country, understanding the 1,000 largest metros in the U.S. is eye-opening. So what did Lance release yesterday? When you look at real estate today, I don't think it is unfair to say we have an inventory problem, right? Specifically, active inventory. You and I have been talking about active inventory below the median, above the median, luxury versus first time for quite a while now. But let's look at the big picture. So let's play a little game. How many markets, again, the max answer is 1,000 and the least is 0, right? That's the range that we're talking about here. How many of the 1,000 largest markets have active inventory today that is above 2019? Okay, 2019, pre-pandemic, pre-craziness, active inventory today. So out of 1,000, take a wild guess, how many metros are above active inventory from 19? And I will give you one more. I actually have 4 stats to go through. 1, 2, 3, 4. I'll give you one more to guess, just because I hope it highlights the value that Lance brings with Resi Club. How many markets? So the first question was how many markets are above 19? How about this wrinkle? How many markets today are down 50% or more? So again, example, you had 1,000 homes active in 2019. You have less than 500 today. So, okay, let's go through the numbers. Again, if you want to guess, pause the video, take a wild guess. It's always fun. But here we go. There are 93 markets that are above 2019 levels. 93 out of 1,000. How many markets are at 2019 levels? The answer is 4. So if you do the math, there are 903 markets below 2019 active inventory. But now for the big question. How many markets are so down that they are actually down 50% or more? Remember, there are only 93 markets above 2019, but how many markets are 50% or more below? The answer? This one hurts. This one hurts. 345. 345 markets have active inventory 50% or greater below 2019. The Fed broke the housing market. The Fed has taken the natural order of housing, first-time buyer, move-up buyer, luxury buyer, and blowing it up. We have first-time home buyers staying put. We have people that want to downsize staying put. This whole buy one or sell one, buy one fiasco is over. It is broken. So we are not getting the listings. Active inventory is growing. We will see if that continues into the holidays, but it's because of mortgage rates exceeding 8%. But we need to talk about that because that has been game changing in the last 48 hours. Take a look at this, folks. Mortgage rates went from 8.03. This is first time, or this is owner-occ, best credit, full down payment. 8.03 to 7.41. We'll see what they do today because it looks like the 10-year is up. But think about that. In 3 days, we've seen rates go from above 8 to sub 7.5. Now we have to ask some questions. Does a drop of more than 0.5% pull demand off the sidelines? My guess, not very much. There'll be some marginal buyers, maybe 1%, maybe 2% that come off the sidelines. Again, studying the consumer for 30 years, you have to realize that the home buyer has been jerked around a lot the last 3 or 4 months. I think a lot of home buyers have basically put their pencil down, right? It's the holidays. They want to decompress. They're beat up. They're stressed out. So my gut is home buyers stay on the sidelines until next year. This really still fits my, hey, if you want to be aggressive and write disrespectful offers, my stance still is out there. You have now until January 31st. But if we get into the spring selling season and we have rates below 7, like 6.5 to 7, that is my fear. That, like interest rates, the 30-year interest rate between 6.5 and 7%, call it February of 2024, frightens me. It frightens me because that will unlock demand. Consumers are very predictable. Very predictable. We get to February 15th, rates are 6.5. They are going to feel like they're getting a deal because their mind remembers 8%. And unfortunately, just as we unlock demand, we have done nothing to unlock supply. 6.5 does not get anybody off the sidelines who wants to sell. They're like, nope, I'm not trading my 3 for 6.5. I don't care if the house is bigger. I don't care if it's a new neighborhood. Doesn't matter. So if we go into February, March, April, May with very low supply, a falling mortgage rate, I'm a little bit nervous. To that end, there was a survey that said 2/3, so 66% of home buyers are wishing for a recession. I want to say that again. 2/3 of home buyers are wishing for a recession. Now, why is that? because they see a recession bringing mortgage rates down. Now, let's not get it twisted. A recession would mean a couple of things. Obviously, negative GDP. Obviously, rising unemployment. But it would likely mean a Fed response and lower rates. So sometimes I have to say, be careful what you wish for. But yes, 2/3 of folks are looking for a recession to bring mortgage rates down. How about Citigroup? I don't know if you saw this, but it looks like Citigroup is going through a company project called Bora Bora. I love it when companies name projects. Bora Bora. Anybody been to Bora Bora? Let me know. I've never been there. It's one of those spots that look pretty in pictures, but I bet you it's hot. Let me know if we should go there. I don't know. That was a right turn, but whatever. So Bora Bora says that Citigroup will be announcing at least 10% job cuts. Yes, folks, the knives are still coming out at finance and tech companies. They're right-sizing their burn rate, all of these things. And it looks like it's going to be a pretty white-collar-led culling. They're going to eliminate regional managers, eliminate co-heads, and other overlapping responsibilities. Think about that whole VP, SVP, EVP, everybody's a VP thing. There will be quite a bit of kind of a lot of layoffs. And again, more than 10%. Whew, that's going to hurt. How about Paul Tudor Jones? Paul Tudor Jones, a legendary real estate investor. He is out calling for the recession to officially start in Q1 2024. He says the slowdown we are experiencing off of Q3's 4.9 is real. He thinks it will be slightly positive GDP growth in Q4, but we will go negative in Q1. I actually agree with that. As most of you know, I've been calling that for quite a while. Warren Buffett, Berkshire Hathaway, releases their earnings statements on a Saturday, which is pretty unique. But one of the things I took from Warren Buffett is he's selling stocks last quarter and raising his cash balance. I want to make sure I get this right. $157 billion. It's a record cash haul for Berkshire Hathaway and Warren Buffett. He is sticking about $120 billion of that in treasuries, earning 5%. Hey, go get 5%. If it's good enough for Warren Buffett, it's good enough for me. That's what I'm thinking. And then let's shout out Millennials. I know there's a lot of folks that want to, say bad things about the Millennials, which I think generally speaking is unfair. I remember Gen X being done the same thing and Boomers being called the same things at that age. Let's be graceful. But Millennials have crossed an important threshold. 51.5% of Millennials own a home. I don't know about you, but I don't think I would have guessed that. 51.5%, more than 50% of Millennials own a home. Obviously, there are regional differences giving home prices. In Iowa, 63% of Millennials own homes. That is the highest state in the country. And the lowest, actually, Hawaii. Hawaii with only 33% of Millennials owning a home, which is interesting. And then grace. What do I mean by grace? I want you to give yourself grace. We are going through some stuff. It is hard. It is potentially scary if this is your first time. I know a lot of you are doing the work. Some of you are not seeing the results. You're like, I'm not seeing it yet. It's too hard. Trust me. The path to getting wealthy is hard. If you stay at it, right, create disposable income, become elite at something, and then do it for 10 years, those are the 3 steps. There's no cutting the line. You will get there. Whether you're a 9th grade dropout, whether you're somebody who lost 80% in the stock market, whether you're someone who found $300,000 in debt and you are a single parent, it's all possible. Create disposable income. Become elite in 10 years. And then lastly, celebrate the little wins. If you are trying to increase your disposable income 50% and you do it, celebrate it, document it, take a picture. That is one thing that I wish I had. I wish as we were on this journey, we took more pictures. There's nothing more that I would like to do right now than see Mike and Olivia standing in front of Norris Drive the day we closed, when we were 30 years old. Take more pictures. You don't have to spend money to celebrate. Take pictures, write a note how you feel or the memory or whatever it is. If you are looking at your buy box every day, feel good about that. If you are learning your market, feel good about that. If you're networking and meeting more people, feel good about that. Don't beat yourself up too hard. This is a marathon. This is a 100-mile race. This is not a 100-meter sprint. It's okay. Give yourself some grace. And then yesterday, folks, I announced that I am currently evaluating having a virtual option for our Vegas event. I know there's lots of people that want to come that they can't. Maybe they're out of the country. Maybe they have little ones at homes. Maybe they have job commitments, whatever it is. I understand. Thank you, thank you, thank you. I'm getting quotes to try to do that. Yesterday, I talked about it potentially being the same price as general admission. And again, I'm just playing with these because I want to, let's be clear, I want to break even. I don't want to lose more money. I want to break even. What I'm thinking about doing now for the virtual show, because it will not be the same. Let me be very, very clear. There is no chance that the virtual session will be as good as the in-person. The networking, the happenstances, the making friends, just all of that things that you will get by being there is going to be better. But again, not possible for everyone. I get it. So this is what I am thinking about. What if, instead of $199, because it's just not going to be the same, right? What if I did the virtual event for $99? And then, or maybe I offer, here, this is all happening real time. I'm playing with this real time. I'll offer virtual in two ways. 99 bucks, you can watch the whole thing, whatever you choose to, or $199, same thing, you could watch the whole thing, and I will give you the recording after. What do you think about that? 99 bucks, you can watch as much as you want for the 2 days. $199, watch as much as you want for the 2 days and get the video. I don't know. That's what I'm thinking about right now. Let me know in the comments below if that's something you're excited about. Again, you want to be there. And then lastly, I asked for a favor yesterday. I asked for you to go ahead and buy your tickets, the general admission for the live event. And I just want to thank you. 11 of you bought tickets yesterday. We were at 84 tickets. Now we're at 73 tickets left. So again, no discounts coming. I'm not going to burn the 200 and some folks that have already bought tickets. You want to get there. This is starting to sell out fast. If you want to be there 17th and 18th in Vegas, talk to all the millionaires that made this channel go. Network with 250 other amazing people. Celebrate 5 years of doing the work. Please buy your tickets. Let's try this. Let's see if we can get under 70 tickets today. So I need 4 people to buy tickets today to get under 70. I'll put a link below. Let's see if we can continue this. Let's see if we can sell this out in November so that I can start focusing on the other aspects. Folks, you are amazing. Remember, give yourself some grace. This is a 100-mile race, not a 100-meter sprint. You're amazing. Keep doing the work. Keep networking. Keep taking pictures and remembering what you're doing. You're awesome. Take care. Bye-bye.